Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Thursday, the 24th of January, 2008, and the market's closed. We did get some follow-through from yesterday's buying. You can see here that we had another green candle, and what a lot of people were talking about is the lower volume. Don't be too concerned about that. Again, I'm going to point out that only price pays, volume doesn't pay. It does give us reason for concern, and given the fact that we are in an overall downtrend environment, you have to be very careful about holding on too long to any particular stock, and based on the fact that we're also in the thick of earnings seasons right now, that you have to be aware of what companies are due out and make sure you don't allow yourself to become blindsided by earnings report you weren't aware of. The market looks like maybe it's going to make a run for the August lows, and just to point out look at the volume back in here. We had this one big volume give up day, similar to what we had here yesterday. And then as the market rallied, the volume was diminishing, and a lot of people were concerned about that back in here. But again, the only price pays, and that's what you want to listen to more than the volume. The volume is important, and it does give us reason for concern. But if you're selling short because of the volume or any other reason, the market is going to give you losses. Basically, the path of least resistance continues to be lower here on the daily time frame. Perhaps we're going to find resistance near that 10-day moving average. What we tend to have happen a lot of times is first we get resistance at the short-term moving average. The bounces get a little bit more invigorated, and we get a rally up towards the intermediate term moving average, or the 20-day. And that's going to be coming down at an angle like this, so perhaps it'll meet up with that and also these August lows. These are just potential areas where we may find resistance. If we take a look also at the most recent leg of this decline, taking this high here from January 10th to the recent low, you can see that 136 or so is a potential area for resistance based on Fibonacci. So, overall, the trend remains lower. If you look at this 30-minute time frame, we did break a little downtrend yesterday like this, but we've got these bigger downtrend lines from the entire trading year so far that will continue to be important. So, this 136, 137 area is a level where you want to be on the alert for the potential of selling to reemerge, and it just means, keep your stops tighter and be on the lookout for short ideas. Right now, though, the market is continues to show some encouraging signs price-wise. It's above this 5-day moving average, but the 5-day moving average is still declining. So I still think that day trading is the best way to go in this environment, and that's the way I continue to approach the market. But we are showing, like I said, some encouraging signs here. You can see on the 2-day time frame that basically we had it was up today, but really it was kind of pretty tight range also. So keep an eye on this level is about 133.5 as potential for support tomorrow. And you can see how choppy the overall index trading was today here in the S&P 500. So let's take a look now at the semiconductors. Again, they remain in this horrible downtrend. They've been finding resistance along this 10-day moving average. Came back above that. And the area to be most aware of in here, again, is this 365 level. That's the level we've been looking at here over the last several weeks. And, it's been making these lower highs and lower lows. That pattern has been broken now with this higher high. Let's see if it can hold above 350, and then maybe it has a chance to get above that 365. But again, it's very high risk if you're looking for long side trades in the semiconductors, because we have such a powerful longer term downtrend in this market. The IWM Russell 2000, according to my screen, changed absolutely unchanged, closed unchanged here today. And again, lower volume drop off in there. Market came up to that level we're looking at as potential resistance, which was $69 a share. That $69 level, the market closed again right at it basically, and that's basically around that area continues to be important. It's the $70 level is also another place where we could potentially find some resistance. If you look at Well, let's look at the Fibonacci off this. We could take this this high here to this low, and we have retraced 61.8%. That's this line right here, and basically it's just kind of neutral in here on the shorter term time frame. If we take a look at the downtrend line, we could draw one that looks like this, and you can see that this 70 area does continue to be important. So keep an eye on this trend line. And maybe getting above that, we see a move up towards that $73 level, which is the bigger level of potential resistance where this market had really broken important support from. So if the market can get up there towards that $73 level, it doesn't look like it has the ability to do that. But again, only price pays, and the short-term trend is, we broke past this resistance level. We've got this higher low right in here. We've got this higher high from yesterday afternoon, another higher low. So you want to be aware of this $68 level. Breaking back below there would be potential for further trouble. But it's just kind of real choppy trading and continues again to favor day trades in this environment. The NASDAQ 100 also continued its bounce. This was up 2% today, so a little outperformance from the NASDAQ 100 today, as it didn't have Apple weighing on it quite as heavily today. But this market, again, we're going to want to keep an eye on the August lows, which we did get back above today. But this ought to be a critical area, I think, over the next few days as well. What I'd really like to see, the scenario that I had hoped for yesterday was a pullback in the other indices towards that 5-day moving average. I'd still like to see a test of these lows, a lower volume test of these lows here over the next week or so would give us a little bit more confidence that this area can hold. And the lower volume on a test would show that there's not as much panicky action, and we'd probably get a divergent MACD that could help make the case for a more sustainable rally to hold. But the 45 level continues to be important as far as potential resistance. Above that, we've got the 46.5 or so. A lot of people emailed me looking at the inverted head and shoulders pattern here. It looks like it's setting up. I don't trust it, but it does look like it's setting up. Maybe back above 45 is where we consider that pattern to be complete. And that will give us quite a nice upside target. This is about $3.50. So that would give us a price objective up near about 48.5, or right up into these areas from earlier in this year, the 10th. So at about 49, 49.5, right around in there. Stranger things have happened, but again, the primary trend does remain lower, and you've got to just be very careful in this environment. It is, I'm going to repeat myself over and over again, it's a day trading environment as far as I'm concerned, and that's where you're going to have the best opportunity to make money, particularly with all the news out there based on the macroeconomics, the banks, the banks, all the subprime and that sort of thing, and earnings season right now.